Hello, everyone. This is Martin. Welcome back to another weekly update. We will be taking a look at the weekly opportunities, the trading opportunities that I'm personally looking at. We covered the major pairs, and we're looking for the opportunities for this week, October the 3rd to the 7th. It's just this week only. We normally look at the weekly and daily charts, and then I would give you an indication as to my trend bias, whether we're to the upside, to the downside, or if I see price action going sideways. And the theme for this week is sideways. I believe that long-term plays are on hold until we get some, a lot better economic news that comes out to provide some momentum behind price action. Right now, a lot of the major currency pairs are stuck going sideways or consolidating within a triangle pattern, and we're looking for breakouts. So we're going to start, as always, with the Euro USD. Okay, here we have the Euro USD. This is the daily chart. Last week, we ended up with a doji candle on the weekly chart, and basically telling us that there is no clear direction. And however, you can see this is the daily chart right here. On the Friday, we had a huge bullish pin bar. I mean, price came all the way back down here to touch the 200 SMA, and then buyers brought it right back up with more momentum. And in the short term, I see price going a little bit higher. So my bias is to the upside in the short term. However, take a look. We've got price contained within a triangle. So here's the lower trend line, the upper trend line. So I can see price going higher to at least test the previous high right here, and then possibly bounce back again to continue its sideways trend. So that's really it's a wait and see situation. We're looking for a breakout either to the downside, so if price comes back down and price goes lower, then we're looking for a break to the downside or a break to the upside above this area of the gray rectangle, this magenta trend line. Okay, otherwise price will just keep going sideways, no real clear direction. Okay, now we get to the British pound USD, and you can see here again, this is the daily chart. Again, last week on this currency pair, we did have a doji again. So again, not giving us any clear trend direction. And what I see again, price is basically going sideways. This pair has been going sideways for quite some time. And although you can see the highs here, they are becoming lower. So we are making slightly lower highs, but we're kind of stuck here at this major support zone. So again, my short-term bias is to the downside. Okay, that's my short-term bias. We're looking for a breakout below the 128.90 area. Below 128.90, we're looking for a breakout, and price then could come down to retest a previous low or even lower. Let me just zoom out a bit so you can see this is a major support key area right here. We need to break this area, the 128.90. Price then could retest the low of here, could possibly go even a little bit lower, then come back. But anyways, that's what we're looking for. Price right now is consolidating within a sideways triangle pattern, consolidation pattern. We are in a seller's market, so again, just look for price to go a little bit lower. Okay. Next, we go to the Australian USD. Okay, here we are in a buyer's market. This is the daily chart again, okay? And you can see that the MACD here, the MACD, which is the blue line, has actually crossed over the zero level. So we are in a buyer's market. There's momentum to the upside. It weakened over the last couple of days of last week. However, I do see this trend. My short-term bias is to the upside to again retest this entire area that I've drawn in with the magenta trend line. So again, just zooming out, you can see this long-term resistance here as designated by my magenta trend line. Here is long-term support with this green trend line. So again, if price comes back down to here, I expect price to go higher, and that's what we see in these arrows. Or you can wait for price to break out above this high. But again, it's not, we've got this entire resistance area. So how high can it go? Probably not that high. Again, looks like price could be going higher, bouncing back lower, and coming back, trading basically sideways within this channel. In the short term, though, I expect price to go a little bit higher and then a bounce back down from the trend line area. Okay. Now we gonna go to the gold chart, which the Australian currency is tied into gold, being a commodity country, and you can see again with gold over the last 1, 2, 3, 4 days. We had last week we had 4 down days, 4 bearish days where sellers took price down. However, again, price is at a long-term support area, so I do expect a bounce higher, and that's the reason for these arrows. So, I mean, if price breaks below the 100 moving average, and price is going to come down much lower to retest this swing low. Just take a look to your left over here, okay? Right now, we are in a seller's market, so I do kind of expect price to perhaps come down a little bit lower to retest 100, but then or even this retest the previous swing low here. If prices come back down, you can expect again a short-term bounce higher. So right now we're kind of in a wait-and-see situation um, for gold. But if you're looking to trade the Australian dollar, I am sort of expecting a bounce very, very shortly in the next couple of days once the market opens. Again, here's Australian dollar, and you can see that's what I'm looking at right there. Expecting price to go at least from here to here. So there's still room for how many pips? At least 50, 60, 70 pips, maybe more if it breaks this high. Okay, now we get to the New Zealand US pair, and here we can see a kind of a major squeeze. So whenever we see that prices stuck not only within this triangle that's supported by this green support area right here, okay, but the red top line, the red trend line, which does show you where the resistance is right now. Price is just being squeezed tighter and tighter and tighter. Not only is it below the magenta line, but it's also below the 21 EMA, and so it's lower than 21 EMA and higher than the 50. So that's a real tight squeeze. Again, we're looking for a breakout, either one of two things: for price to break out above the trend line to go higher, for price to break out below the green line to go lower, and then come to this area of confluence, which is the gray rectangle, immediate support, and also tied into the 100 SMA right here. Okay, so I really like my bias right now is toward the downside, so I'm kind of looking for a break to the downside. It may go sideways for 1 or 2 more days, but that's what I'm ultimately looking for, is a break. Getting ready, anticipating a sell trade. We are right now in a seller's market. Take a look at the MACD. The histo bars are red. They are below the zero level. The MACD in blue here it is technically we're still in a uptrend, although the red histobars does say that even though we're in an uptrend, the uptrend is weakening, and um, we may just bounce sideways before another move is made. Okay, so now we get to the US CAD. US CAD obviously tied in to the price of oil. We will be taking a look at that chart next, but here we can see some major sideways action. This is really it's been going sideways for a while. You can see just up, down, up, down. I would kind of stay away from this pair, and you're looking either for Um, you're looking for either a break above this swing high right here. Okay, so you're looking for a break above, let's just take a look, see what that is. So you're looking for a break above the 32 80 level, okay, or you're looking for a break to the downside below the 100, well, either below the 50 or below the 100, and then price most likely will come back down to the trend line to test that, or you retest the swing low here. We are in a seller's market. You can see with the red histo bars. We've had a crossover with the MACD line crossing the signal line. That happened a few bars last week with this big candle. So basically, we're still in an uptrend, but the uptrend is weakening, and my bias on this really is sideways, just waiting. I don't really have a bias on this one, not really up or down right now. You kind of just wait and see, okay? And let's take a look at the next pair. Oh, I'm sorry. We're going to take a look at the oil. Again, oil has gone higher. Okay, last week was a really good week for oil, and I expect oil to go at least retest this previous swing high right here. You can see that. So there's room to the upside. The MACD bars show green. We are in a buyer's market, so you can actually almost take a buy trade or wait for a slight retracement before taking a buy trade. But watch out, we are close to resistance here with the gray rectangle and the previous swing high. So oil is if oil goes higher, then let's take a look at US CAD. You can basically you can almost expect US CAD to weaken just a wee bit and come back down to retest the 50, the 100, even lower right down to the green trend line before bouncing back higher again. Again, as I mentioned, we are in a seller's market for the US CAD, and that's reflected by the price of oil, which is the opposite effect. So price of oil is up, the US currency is weak against Canadian dollar tied into the strength of oil. Okay, now we get to the US Swiss franc, and here is another major sideways move. You can see that price is really not going anywhere. Last week we had a big doji candle. Price right now though is below the 21, below the 50. The moving averages on the daily chart here, they are lining up. So the 100 is below the 200. So in order, we've got the 200, the 100, the 50, the 21, but price is stuck in, and sellers have not become strong enough to take it below this resistance area I've drawn in with the green trend line. You can see that. So price has to break below here for us to say that price is going to break to the downside and then retest this long-term trend line. Okay, just to show you the long term, let's zoom right out. Okay, and you can see that this goes way back. This trend line kind of goes way back to the middle of June of 2015, and it seems to have held. So I expect again price to really come back a little bit lower. I think my bias is to the um, well, we're in a wait and see situation. Price has to break below the trend line for us to say that price is headed further downwards. Take a look at the MACD. Two big clues here. We are in a seller's market, and the MACD line, which is in blue, has actually crossed the zero, indicating that the downtrend is gaining strength, is gaining momentum to the downside. So perhaps we'll go sideways for a bit and then finally break the trend line, and price will again come back down to retest the overall trend line, long-term trend line, and the previous swing low here. Okay, now we go to our final pair, and that is the US Japanese yen. And I mean, this basically has been making lower highs. You can see here, here's a lower high to a previous higher high here, another lower high here, a previous higher high. another lower high, lower high, lower high. So again, this pair is being squeezed in royally between the upper area of resistance, between the lower major key support area that I've outlined in the gray rectangle. So there's only two things that can happen. One, price can go a little bit higher, retest this upper area right here, the magenta trend line or the previous swing highs here. It can either break out and go higher, or it's going to just come back down and just do that. It's going to come back down, bounce off the resistance, come back down and come and all the way again toward this support. It's key support. So again, once it comes back down there, it could bounce back up again. So there isn't a lot. I mean, what you can do is almost, if you see a bounce off the resistance, take a sell trade because it's just going to keep coming back down. If you see price come back down, bounce higher, take a buy trade. But realistically, for a long-term move, and that's the theme of this, we're looking for a break below this key zone right here, and that would be the 99. Well, it's really the 99.80 area, or well, in this case, let's say 99.50. So we want to have a break below 99.50 for price to confirm that for once and for all, price is going to keep going down. But I kind of find that unlikely because, again, like I said, it's the U.S. Japanese yen, U.S. Generally the U.S. currency has held its own. Every now and then, good news comes out and it propels the U.S. currency to become stronger again. So this one's just kind of going sideways. It's a wait and see. Here you can see with the MACD, we were in a seller's market. It's improving here to the upside. You can see the red histo bars are becoming very tiny, and we may even have a crossover. um, Again, you can watch this if you're using the MACD to help you make trade decisions. Never use an indicator by itself. It's not going to give you precise entries or anything like that, but you can use an indicator to kind of guide you as to where where the momentum of the market is. And the MACD is a great trending momentum indicator. So if the blue MACD line crosses this signal line, the red signal line, price could go higher. However, if we kind of have a touch, the two lines are close together, we'll be going sideways, and then maybe a bounce down again, and again, if the blue line continues going down, then obviously price is confirming that it's going to go back to the downside. So wait and see. Going sideways has been a long-term sideways consolidation, and I don't see much else happening. And that is the U.S. Japanese. Wish you all good trading for this week. This is a short wrap up. It's a short video. Hopefully you enjoyed it. And if you need any help, please feel free to email me. I will answer all your questions in a timely manner. So take care. Happy trading. And enjoy the fall colors here in Ontario. The leaves are starting to fall from the trees. It's one of the best times of the year for me. I love the fall colors. Take care, everyone. Happy trading. Bye for now.